the trading desk of dailyforex.com. This is Christopher Lewis looking at the euro dollar pair for the May 11th session. As you can see, I have the daily chart out, and as a little bit of reference, why don't we go ahead and zoom out. You can see that I have the triangle drawn, and this has been something that I've been watching for quite some time. It seemed like it took forever to break down, but it finally did, predicated upon a gap over the weekend, as most of you know by now. And having said that, when you measure the triangle, you measure from the top to the bottom, the absolute high to the bottom, it's about a 500 pip move. So having said that, it projects 500 pips south on the breakout, which from 130 has us aiming for 125 before it's all said and done. With that in mind, I look at the chart and I can see that there was a swing low down at about 126. So there's some choppiness up ahead, of course, but the way this pair acts, that's not really a surprise. Choppiness seems to be the name of the game. Looking over the last couple sessions, you can see a couple interesting things have happened. We had the gap from the weekend. We dropped down below, and we came up and we basically filled the gap. Fell a couple pips short, but nothing to be concerned about. And Thursday had a very interesting candle, which was an attempted rally that failed. It's a shooting star at the bottom of a big down move. This suggests continuation. Traditionally, when we look for shooting stars, we look for them up at the top of a move, but the fact is it still tells the same story. It shows that they tried to rally and they failed. If we break down below there, everybody who tried to rally is now losing money, and that's essentially what you wait on. Break down below the lows from the session from Thursday, and especially even Wednesday. Wait for that, which is about 129. So if we get sub 129, we could expect to see more weakness, and that's essentially the only trade I see at the moment. If we do pop back up, I'm going to ignore it, quite frankly, because there are just so many headline risks coming out of Europe, and as you can see, you've been better off just shorting. The moves have been much stronger to the downside every time we've fallen. When you look at these red candles in comparison to this, you can see it's a lot of choppy and dicey trading. So, looking for a breakdown below the lows of at least Thursday, if not Wednesday, which would be the 129 handle essentially, and at that point a move down to 126. If we get that, there's a chance that we may run down to 125. After that, would have to take a look at the price action at that point in time. Certainly I would have my stops move down. Wouldn't be willing to take a loss at that point, but as you can see, we are setting up for some continued weakness in the euro dollar at this point.